Hey traders, how are you guys? I'm gonna do an update here on Bitcoin, Neo, all the stuff that's really ripping this morning. And today, um, these weekends, when all the other markets are closed and you got Bitcoin still whipping around, it's just fantastic. Some of the lows have come on Saturdays. Some of these breakouts have come on Saturdays, but just really spectacular moves. So let's just talk about where we're at now here on Bitcoin. I was just talking about the volume. I don't tend to follow the volume a lot when you look at a lot of the other markets, the deeper markets, because volume used to be important on the exchanges. Um, but now, once everything started to move away from the pits and all the different screens and different platforms, you can hide size and liquidity, and there's dark pools. Um, so the volume just doesn't matter as much anymore, but it does for the crypto space because um, those deep uh, those liquidity pools don't really um, pertain. So if you're looking at the GDAX here and there's volume based on this exchange, I think it's just a lot more helpful. So anytime you have a pullback, anytime you get a pullback to the bottom of our bands here, you get a bottoming tail is a nice setup. Okay, that type of candle at the end of a pullback is powerful because it's showing you that the bulls are stepping back in and they took what was a really bearish move and then they took it all the way back up. So as soon as you got this bottoming tail right here, and you'll notice the volume, this was a down candle, but the volume picked up. So the fact that the candle was red, right, and then all that was eclipsed, and which forms that bottoming tail, that's a very powerful buy signal. And so that right there propelled the market higher. Essentially, you had the same thing here, V bottom. You can see how the volume picked up. And then notice this candle. If you'll notice this candle here, this is the largest candle on the chart looking back at this time frame. We call that a real money candle in our model. It takes real money, a lot of buying. I mean, there's not a lot of institutional players in this market, but if you want to create that type of candle on any other market, like in treasuries or Forex, you got to have some real big money, institutional money, money center banks, central banks. Um, that's what creates these types of candles. So we call that a real money candle. And you'll notice all that volume, that started this entire move. Okay, yet another real money candle here. All right, but at this point, we're still making headway here on good solid volume, which is indicative of a raging bull market. But guys, you got to be taking profits up here. That's the main thing to get out of this. Yeah, we broke out here at 3,000 on a Saturday. But when you're up 1, 2, 3, 4, 5, 6, 7, 8, 9 days, all right, there's an 8.6 wave frequency that exists. The global economy happens to be on that 8.6 year frequency. But that frequency exists on the 1 minute chart, 5 minute chart, the weekly chart. And so there's lots of different cycles, right? There's different frequencies. But anyway, so anytime you get up 8, 9 days, you got to be taking profits up here. If you're just now entering the market, you're way late. You're chasing. Okay, we were buying in here. We were buying here. We were buying here. Now you start taking some profit. Right? Doesn't mean that this can't go to 5,000. It probably will because everybody, as soon as you get through 3, the natural target is everybody talk about 5. Okay? But I mean, we've already doubled, more than doubled since the lows off here at 2,000. You can see that the cycle is very high. Okay? Anytime you get up here, you're towards the top end of the cycle. Just like here, the bottom of the cycle, you want to be buying. Now you're getting very extended. If you look on a relative strength basis, just keep it simple, same thing. All right, you're up towards 80. I mean, you can extend higher up into the 90s, but this is definitely getting into territory where you want to take some off. Well, let me come back and do Neo on a different recording just to keep this one short and simple. And then from here, guys, just stay with the core position. So we like to look at what we call these walls. So any type of retracement here, all right, whether you want to look at the wall, the move that started here, or the move that started up to here, we want to be buyers again back halfway down this wall. So a 50% retrace is all inside of here. All right. So we take profits, keep a core long, and then don't be afraid of a pullback. Any pullback within this strength, we want to be buying. All right. So we like to buy back near the 8, get even more aggressive near the bands. You can see here, held the bands, held the bands, held the bands. These green lines are the bands. Okay. So when you get extended away from those bands, that tells you you're overbought. You don't need an RSI indicator to tell you that. You just look at the angle and the distance away from those moving averages. You can see the distance from the 8. You see the distance from the bands. That tells you you're overbought. So you stay long. You stay long some. That's what we say. You want to ride a core long position, but take some profits. The next pullback, multi-day pullback, we start buying in. We'll be getting aggressive if we got anything back towards 3,200 or 2,800. It'd be very hard to get back below 3,000. That's kind of where you broke out from. All right, so take profits, and then we're gonna do not be afraid of pullbacks. We want to buy pullbacks. That's what you want. You don't want to be chasing highs. You want to be aggressive when everybody's puking here. Okay. Anyway, I think you guys get the point. I'll come back with a Neo video.